Yeah, g'day, Alex. Thanks for the opportunity. Yeah, no, great to see the appetite was there for a $20 million raise. We were delighted to be involved in that. And importantly, it went to two big international resource funds. So I think that's important. That really does add a good deal of credibility to Southern Palladium. So very, very pleased with that. But just on valuations, I mean, that does allow me to change my valuation a little bit. But it's sort of, and certainly the recent share price strength has allowed me to adjust upwards my valuation. As I've portrayed in previous research, we've looked at two valuation scenarios, and I have to stress that these are very conceptual, but, I continually get asked by shareholders and potential shareholders, but what is the valuation of this company? The project itself might be worth upwards of $1 billion, depending on the commodity price assumptions, but what's it worth in the hands of Southern Palladium? So I've used two scenarios. One, which is sort of a fully integrated and staged project. Remember the stage 1, 200,000 ounces per annum, still a big mine in its own right. And then expanding some 8 or 9 years later to 400,000 ounces. And that took quite a lot of capital out of the project, best part of $100 million US, over $100 million out of the project. So peak capex now about $279 million in the optimised pre-feas study. I've also assumed 50-50 debt equity funding on the project and or debt to capital for the project. And I've also assumed for this, because there was still a bit of equity to be raised, that they'd sell down to 50.1%, say to an off-taker, again, purely conjectural. And then there's a modest equity raise. Again, I've assumed at $1.10. That generates an NPV of about $5 a share, so a significant premium to the current share price. Not saying that that's the share price target at the moment, maybe long-term, but it certainly does show that there's a very strong embedded value in Southern Palladium. The other option, which they flagged in the optimised pre-feasibility study, was a deal whereby they may look at toll milling of the ore, so effectively take out $140 million US out of the capital, and then sell to another mill in the area. And there are a number of mills on the Eastern Limb, as we know. So still 50-50 debt to capital, but no sell down. So they'd retain 70% of the project and a modest equity raise at about $1.10. And that generates a valuation, again, very conceptual, fair bit of guesswork in there as to what they're going to have to pay for toll milling and that sort of thing. That generates a valuation of about $5.50 a share. So about 10% more than the first option. So again, stress again, very conceptual, but it does indicate that there is significant upside from this project, and that upside will become apparent as the feasibility study is completed and as they move towards financing.